RSI. As simple as that. Like the RSI and another indicator I use called the awesome oscillator. They're both momentum based indicators. They basically both said that every high we're putting in now is getting weaker. So we're essentially tiring, and eventually this starts to roll over. So both of those indicators were basically saying each high is essentially, it's a fake high. So we start seeing that there's just a loss of momentum into each one of these highs. And typically, when you start to see this, especially on the higher time frames, you can get some sort of relatively decent higher time frame overview. I sold my spot probably a little too early on the first run up. I got out at 52k. I actually started selling into that second peak that you see. So when we got the correction off the second peak, I was kind of nervous that may be it. We then got the extra leg higher, but essentially the higher time frame pictures never really changed kind of throughout the creation of the highs, just largely stayed as one big fat diverging area. So that was really just the clue. And the biggest thing is like not doubting what you see. Because you can play loads of self-narrative. You can go through like, oh, fuck, really, we could hit 100K here. everything looks good. The market surprised me twice before. We could do it. It's kind of sticking to, if it says this, it's probably not lying to me. It's like it's continuing to show me the same signs. So really just belief in, what I was seeing and what I've seen. There are basically three core points to the system that I most commonly speak about. The real core concepts are like RSI, horizontal levels, and market structure. So they're like the three core concepts. And for anybody, that's fresher in trading, I would highly recommend the study of all three of those. Drop RSI if you want to, but horizontal and market structure, very, very important. So the confluent factor from a price action perspective for me was the creation of the lower high around 58K. So when we got the rally on BTC and we came back up towards that sort of 58K area, and it was the former resistance region, we've got some pretty major confluence from my system. I've got my big fat divergence on the higher time frame. I've now got a retest of a significant resistance region, and I've got the break of the market structure. So once we took the low, when we went down to like the 48s, on the original sell-off, broke the structure, rallied for the lower high, and then got the eventual momentum shift and the push down. So really, kind of the trifecta of confluence at that point, which is about the best that I could hope for. If you look at the midpoint of RSI, so the 50 level, you notice the way that the 50 level continuously holds the uptrend. Right, we get some deviations below and then we straight back above, and then you look at the way it reverses after we've had the sell-off, and the way it contains it from a kind of a bearish perspective. So when you're looking for RSI divergences, you're looking for two or three key things. The number one is we would expect any RSI divergence to end in an impulsive move, whether that be on the 5-minute chart, whether that be on the weekly chart. We would expect some significant shift in the market in order to clearly demonstrate to us that that event had played out that we were planning for. The other one that you've got is the loss of a 50 level. So when the 50 level is lost significantly, it tends to be a major point in the market. It tends to shift quite dramatically who's essentially in control of the market. So bulls above, bears below. And then the last thing is we talk about end-to-end runs. So this is where we go from an overbought region of the RSI all the way down into the oversold region of the RSI. And that can also be a trigger for knowing when a div has played out. That tends to be the play. The 50 level is so significant. It's a really weird one to have such significance, but that midpoint really is significant. Trending markets tend not to lose that level from one direction or the other. Whether that be from bearish trends or bullish trends, it tends not to lose it. And you also tend to find that from spot buying perspective, it tends to be just the simplest trigger that you can take. Because it says the uptrend or the downtrend has cooled off enough, it's probably corrected, and now you're ready to enter another position again. That's usually how simple it is for that. Overall, I think the market looks like shit. I think it's terrible. I think that everything goes a lot lower. I've been that way for a while. I said back in January that I thought that the initial sell-off on the indexes was probably closer to the start of the blood than it was the end. Probably now, I think, we've advanced, obviously, in that journey. The indexes have made fresh lows from that period of time. I think we're down another sort of 15% from that original thread I did. I just feel as though in the current climate, we know that the market, more than anything, it likes to know what's happening. It doesn't like indecision. It doesn't like events that potentially can just come out of the blue and smack it. And that's the current environment that we're in. And I think that, the war that we've seen as well, that really has been kind of a mask on some of the core issues that were already there that we seem to have kind of forgotten about. So, like the Fed's involvement and the discussions that we were having pre-war, those have kind of been pushed on the back burner for now. I think overall, I still think crypto has probably still got significantly lower to go. I've always said I wholeheartedly believe 30K breaks. I don't know when that happens. As soon as I say it, people are assuming that it happens in the next, 48 hours.
Yeah, sell now, guys.
Yeah, exactly. Yeah. So, but I do think everything trades significantly lower from where it currently is. And I still believe that to be the case. I don't think there's been anything, what positivity do we have right now in terms of stabilization? I think there's very little that we have. So for me, I think everything still looks in a really, really bad way. But in saying that, it's always really important to balance the thought process, because I speak like a bear on Twitter, but I don't care. In reality, if the market gives me a signal to get long, then I've got to get long. It's not holding on to that, thought process and being like, well, Twitter thinks I'm a bear, therefore I can only short and, push bearish propaganda out every tweet. Although it would be super brazen to be saying, yes, we're going to 13K, yes, we're going to 12K. I think that for the majority of people who have been in the space, it's the possibility of that you still need to keep in mind. The bigger problem for me is people should never be pissed off or aggressive with people that put forward suggestions on something like 13K, like we're discussing, right? The people that you should be more concerned about are the people who tell you a price total will never happen.
Yeah.
Right? Like they're the people who you should be wary of. The people who are willing to sit here and discuss, okay, yeah, look, within reason of what we've seen on previous cycles, that could be an area of interest. That's fine. If you've got somebody who's like, it will never go below this level again, it will never ever touch, 13K again, it can never go below previous, like they're the ones that you should watch out for, not the people who are willing to entertain the thought of, it going there. That's the dream scenario, is we blow through 30 and we get a recovery back above. Because I think for the majority of people, that gives the very easy buy signal. And then it's just like buy spot, fine, back inside the range, do whatever. I think the concern would be if we came below 30 and retested and rejected, right? Yeah. That's, I think, where the concern for the market would then stem, because depending on that initial impulse down and where that takes us, if that's a true capitulation event, which it very well could be, is it going to be something that's easily recovered? And, you'll, just like me, still have, dreams, nightmares about the 6K level.
Oh, God.
And during the rally after COVID, we all thought the 6K level would probably be a pretty chunky resistance point, and we just blew straight through it and continued the ascent. So I would like to think that 30K becomes that. I would like to think it becomes just a reclaim point, and we all get spot long, and that's it, and BTC cycles again. But that 30K will be the new flip point, long or short above that. I think right now is a huge point. Exactly where we are now. I think again, I know that you like the horizontal, but I think if you stick a nice diagonal underneath the current lows, basically there's, you've got the three lows, and I think that right now the holding of this region is incredibly important to BTC, because if we start trading below again, we either get an event like we've had on the two last major sell-offs below this diagonal, which is, rapidly bought up and recovers back inside, or I think it's now time to start thinking about further downside. And again, going back to the RSI discussions, the RSI is in a pretty nice place from a higher time frame bearish perspective to have an impulse down again from here, right? We've done the kind of the cooling off, the chopping around, we could impulse again. And if you consider what you said about the indexes, looking as though they're going to impulse, I can make the same argument for BTC from this position here. So the reality is that despite me saying all of that, you're actually in, probably from my perspective, one of the best positions to try and long this, because you've got your stop that you can stick underneath the lows. You can make sure that you're not caught out on a major sell-off below there. But I think this area needs to hold. The bullish side of me wants to see 53K. That's the bullish side, because macro, I would rather see a macro lower high prior to seeing a lower low. So I still have kind of bullish dreams that we get the rally to that 53. I think that the next time we hit the 45s, I think we probably break through it. And I would love to see us trade towards that 53 zone.
Yeah, it's the same. I think that 2000 cracks the same way 30K cracks. I think ETH is in a worse position at the moment than BTC.
It looks worse, yeah.
I think like the daily looks pretty awful. It's had significant closes lower now. For me, it would be if we started to break down and started to see any, strong impulse to the downside, this would absolutely be the preference to be short on versus BTC. We've always seen it on ETH anyway. The reactions to those sell-offs tend to be absolutely horrendous. So, if the market does decide to puke, then I think that ETH is still the far better option to be. I mean, most alts are the better option to be short on, but if you need liquidity, then ETH is still going to be the best selection here. I think it's retesting currently what you could map as an important daily level as well. So, overall, again, pretty trash. Expect the lows to go at 2000. And then I think ETH is probably a little bit more difficult to try and ascertain
where the
where's the natural stop for that? Because what we'd be hoping for is just the lows to go, right? So all that little cluster we've got of all the lows, like we would want that taking and then recovery back inside. But
yeah, I wouldn't really want to see it trade too long below that kind of 1500 to 1800 box there.
Yeah, and I'd expect that I would want the reaction to be pretty damn strong from there. If we sweep that area, I would want us to sweep and recover pretty clearly. I was incredibly lucky with my timing. I started buying NFTs in February of 2021. That was like my first move with NFTs. So I was very, very fortunate that I essentially bought a number of things that increased dramatically in value. And I then just started basically playing into the trend. So it was just like the easiest money you could make, because the market had kind of like slowed down a little bit and NFTs were just ripping and it was this brand new thing. And, everybody was super hyped up about it. And because I kind of approached it with a trader's mentality, I think it was a lot better for me because I was able to just say, yeah, okay, this shit is like 5x'd in a week. It's time to sell it. Yeah. Right. There's no like emotions. Yeah, exactly. Like there's no emotion to it.
Yeah.
So actually, like the NFT cycle was a very lucrative time for me. It was a very good time. And actually, it is one area of crypto I still kind of remain bullish on in the macro. I don't think there's been anything that I've seen so far as dramatic and as normie grabbing as NFTs have been. And for me, I think when you see the way that companies talk about NFTs, Nike's had, an NFT development team for years. Like these guys are aware of the technology. They know the potential of the technology. And I think that area does get me excited for kind of, crypto in the mainstream. I think, the impact that NFTs had in the summer was huge, and continues to have now. There's basically been no better pull from crypto than those people. Like we got people now who would never have touched MetaMask, but now understand how MetaMask works and how it can be used, within Web3. And, there's a huge pull to that side. So I just think, company perspective, I think future perspective, I'm, incredibly bullish on the NFT side of things. Like gaming is slightly different, but NFT side and application of that technology, I think is one area that I am incredibly macro bullish on. The thing is with kind of the NFT side of things is I think that the liquidity is such a big problem that you have to be very aware of how much money you are putting into that market, because unless you can find a buyer, like that's it, right? It's not like just hitting market sell and just thinking shit, that was a bad investment, cut it, go. You really either have to have like happy with the spare capital, or from my perspective, it's simply kind of like an ETH accumulation wallet. So it's basically like I don't really care too much about the value of ETH in USD. All I care is really about getting more ETH. Well, I think you've got the interesting discussion point then, because what we saw a few weeks back on when ETH first sold off was actually we saw a pretty big increase in some of the floors across major projects. So what you've got is a situation where what encourages the buying of NFTs. So if ETH is 3,600, 4K per ETH, for me personally, and just, speaking plainly about it, I would have a greater thought process attached to that because I always keep the USD value in mind.
Yeah.
So I'd have a far greater thought process about, do I want to pay 1 ETH for, this JPEG of a dog, right? Whatever it is.
Yeah.
However, when the price of ETH drops, then potentially some additional buying will take place because people who are sat in USDT, USDC will now move into ETH and take advantage of essentially cheaper ETH to have more buying power. And then you've also got the other side of it, which is if ETH is falling and my main goal is to accumulate as much ETH as possible. Let's say I'm bullish on the next 2-3 years on ETH and I want to accumulate as much ETH as possible. If ETH is dropping in value, but the NFT market is doing 2, 3, 4x's, every week, does it make more sense for me to instead be investing my ETH in NFTs versus going into stables, right? So I think you've also got an argument, which is people who, instead of going into stables, will instead start buying and selling JPEGs because they can accumulate more ETH that way. The market is, exciting, it's moving, it's, giving you great returns. There's that argument as well. How much is the draw of NFTs? Will that overtake any ETH accumulation instead of going into stables? This is like a big love of mine is okay. Cosmos. When I see like both of these charts from a weekly perspective, both Atom BTC and Atom ETH, I feel more positive about Atom and Cosmos as a whole. Been a very, very strong ecosystem. Not many people know about Cosmos ecosystem still. Not many people play things on there. It has some exceptional apps on there. There are coins that have been making all-time high after all-time high that have been unaffected by the BTC price action and the rest of the market. There's been incredibly strong stuff going on Cosmos. And I think that these charts, both Atom BTC and Atom ETH, probably represent, I think, the greatest hope for Atom to be a performer. So for that condition to materialize, I need BTC to hold, right? Like ideally, I'd need the BTC move to 53K. And then I suspect that Atom would be an outperformer to BTC. The reason I started in that ecosystem was because we had AVAX eco popping off, we had FTM eco popping off, we had obviously BSC's shitcoin season before that. Like we had like every eco popping off, and Cosmos didn't. So what I said was I want to position in Cosmos so that by the time the plebs on Twitter realize that shit is popping, I'm already there. Right. And I can just kind of kick back and I can start selling into them instead. So that was really like the thought process behind it. But actually, I've become, more and more interested in kind of the Atom play out overall based on, where we currently are. And again, the higher timeframes look better, which again is super positive. And we haven't seen really, we've seen that very choppy action on Atom as a whole. But everything else put in things like monthly divergences, weekly divergences. Actually, Atom remained relatively neutral. It didn't break its last all-time high. It's still keeping a nice higher low on the weekly as well. So there are a lot of things for Atom that can work in its favor. For me now, so I'll go back to kind of, running the business, because that was essentially the trouble that I had during that point, when I was running the business and doing that. And it's consuming because, of course, that's what you tend to do. The overtrading aspect of things is something that you would have to manage individually. That's usually a case of, some self-discipline and self-restraint being shown. So the overtrading is really just down to you as an individual to basically slap yourself out of doing silly things. The staring at the charts all day, I was doing it. I was putting in 18-hour days essentially every day, combined with running the business and then also kind of staying on top of charts, plus also wanting to learn and evaluate and analyze all of these charts at the same time. And I wouldn't change that experience now. The one thing I would say to you is ensure that you are doing it in a productive fashion. So if you're just sitting there staring at a 5-minute chart because it looks mildly entertaining, then that's a waste of time. If you're doing it because you're actually doing things like mapping out levels, seeing how things respond to certain areas, taking notes, then you have something productive that you can do with your time as well as staring at the charts. And very often, if you treat it like a job, so you sit down and you say, look, for 2 hours, I am going to intently look at the charts, analyze, follow price action, do some back testing, whatever, you'll feel more kind of as though you've achieved something at the end of that 2 hours and feel easier to switch off from it. Yeah. If you're just sitting there staring, you just become like a zombie to the price action. You're not doing anything, it's just there. And yeah, I've wasted fucking days of my life
with that approach. And like, I'm sure that Main has as well. You're just staring at it, and the longer you stare at it, the more condensed your time horizon becomes as well. So every 5-minute move of a candle suddenly becomes super significant to you, and you're like, this is the breakout, this is the breakdown, this is the so everything gets fucked with the more you look at the chart. So just be productive, or do something else with your time.